Hi, my name's Adrian Trollor and I'm the Portfolio Manager of Sustainable Investments. I'm responsible for Advance's implementation and approach to sustainable investment in our portfolios. That means working with our portfolio managers and our asset managers in implementing our beliefs in relation to sustainable investment. It means I spend a lot of my time talking with managers, understanding how they're approaching sustainable investment managers, bringing those into the consideration in their portfolio construction, and also thinking about how we as asset allocators are taking into account sustainable investment themes. So sustainable investment is an evolving investment practice that is looking at environmental, social and corporate governance, and that's what the ESG stands for, issues and factors and how they're taken into account in investment management considerations. It's also about managing risks and or opportunities that come about through a greater examination of environmental, social and corporate governance issues and how they impact on corporate returns or the returns from a sector or the returns from a company asset allocation. What do we mean by ESG? Well, environmental factors consider things like the way that a company goes about managing its waste outcomes, environmental concerns such as climate change and how that may impact investing either through opportunity or risk, and generally how a company examines its environmental footprint and takes that into account in its business strategy. All of this again is about from a financial perspective. Social factors capture things like labour practices, changing demographics, the way that a company interacts with society and adds or detracts value from society, and the emphasis that society puts on a company in its participation in societal outcomes. Corporate governance is largely well understood in the investment industry but is getting increasing focus, and it includes things like the way that a company is structured, board composition, other internal risk management practices of companies, and things like the prevalence of bribery and corruption within companies or sectors or regions of the globe where our investments are placed. So what is Advance's approach to sustainable investment? Well, we believe that including sustainable investment considerations into our decision making can enhance our ability to meet our longer term risk and return objectives for our funds. Our approach is very much coming from a financial return or risk mitigation perspective. What does that mean in terms of implementation? It means understanding how our investment managers are taking into account ESG factors and considerations in their investment process, and to the extent that their process is open to including those factors. Considering some of the more macro-oriented ESG themes from a total portfolio level and how we might manage risks or take opportunity of those themes in the portfolios, as well as a quite important element to sustainable investing, which is actually facilitating engagement with companies by underlying managers, or actually taking engagement or engaging someone to take engagement on our behalf directly with companies on ESG issues. We use an outsourced provider to actually directly engage with companies in some instances where there are material ESG issues that need to be considered in those companies' strategies. One of the key things that we do for any new investment manager that we're prospectively looking at adding to the portfolio, we'll take an underlying detailed analysis of their ability and their processes' ability to consider ESG issues in their investment management of our funds. So why is this important? This is important because there's a growing body of evidence that suggests that traditional investment practice, which just focuses on the financial facts and figures associated with companies, is too narrow a lens to apply to understanding issues that actually might impact a company's financial outcome and the way that it derives its earnings. So things like the changing and evolving nature of government regulation and government forces, changing forces in terms of society's understanding of corporate structures and their interaction with society, and a generally an environment in which there's greater societal demand for companies to be responsible, as well as an increasing proportion of companies' values being tied up in intangibles, which are traditionally not valued particularly well in traditional financial analysis. A good example is of the sort of evolution that's occurred in financial markets is in 1975, less than 17% of the market value of the S&P 500 was tied up in the valuation of intangibles. Today that figure is well over 80%. And intangibles are anything like the brand and reputation associated with organisations, the way that organisations are able to manage and get productivity out of their workforce, the way that organisations can access markets, their licence to operate in those markets. And so all of these factors are becoming far more significant in the financial outcomes associated with companies. And obviously from our perspective, we want to understand the impact that those intangibles and the risks around those intangibles are driving investment returns for our underlying investors. We have a framework in which we consider sustainable investment, and look, it's got to be said that sustainable investment practice in the industry generally is an evolving practice. So our framework needs to evolve. We've started with setting our own investment beliefs around sustainable investment, and they're available on the Advance website, and I encourage you to have a look at those. Having set those beliefs, we've done and spent a lot of time building knowledge within the team about ESG factors and how they might impact financial returns. And that includes my work with our portfolio managers, as well as accessing external research that really enhances our understanding of these factors and how they may impact corporate value. We've then gone about taking that research, our beliefs, and a deeper understanding of the ESG factors, and sort of evolving our practice to consider how we might take into account some of these issues at a portfolio construction level. And look, as I said, this is an evolving practice, and we can expect that our ideas and the way that ESG is implemented in our portfolio will certainly evolve over time and really pick up on sustainability and its approach to managing ESG risks.